Gold, gold. Oh my God, what's happening to gold? A couple of weeks ago, we were above 1,300. Now we're at 1256. Is gold broken? What's going to happen to my GDX position? Should I get out of GDX? These are the thoughts and emotions that I'm trying to fight within myself, and maybe some of you guys have sort of similar emotions, because we have been in a declining phase of this intermediate cycle, and gold has declined pretty convincingly over the last already a couple of months, and we are at the stage where we are feeling like some anxiety, maybe even a little fear regarding the gold price. And generally what we do feel at cycle lows of any kind of asset price is fear, maybe sometimes panic. And what we should do is we should try to be rational investors rather than those that follow their emotions. It's very difficult to decide on a long position when we are feeling fearful, but that is usually the best time to go into a long position. So my opinion on gold price is that we are now, compared to my previous video, are much closer to this cycle low. I expect this cycle low to happen just within the next several days. There are still a couple of days this week. We might even see a low this week, or it might happen sometime early next week or sometime during next week. Now we are at 1256. If we continue this decline, I think we might reach something like 1250, maybe only a couple of dollars below that. We will have a look at the reason why. But after that, I do expect a pretty nice rally. Why do I expect a rally to start soon? Well, first of all, the duration of a normal intermediate cycle is about half a year, and this is how long this intermediate cycle has been going on. It is due to finish pretty soon. Another pretty convincing reason is that RSI at the moment, the 14-day RSI, is at 24.5. So if we go back to previous intermediate cycle lows, we gotta go back all the way back to this Trump election time in the end of 2016, where we've seen RSI dip so low into the oversold territory. So we are very low into the oversold territory. We haven't seen these readings for a couple of years already. Another interesting thing is this death cross, the 50-day moving average crossing down under the 200-day moving average, and there are a lot of news about that. All of them, of course, are negative news, and one would expect a lot of negative news, fearful news near the cycle bottoms, near the cycle lows. Well, let's have a look at this death cross. When did we see that in the past? Well, actually, again, at this time of Trump election, we saw this death cross, and about a month after that, this intermediate cycle has bottomed. Do we have another month of lower prices? Is gold going down to, I don't know, 1220 or so? I don't think so. I don't think so. The reason why I don't think so is at the time of this death cross, the price, well, it was below the 50-day moving average, but it was not stretched as much below the 50-day moving average as it is now. For that reason, I don't think it can stretch that much further down. Now looking at the chart of the US dollar, this is the DXY index. Here's another reason why I think gold is about to bottom. Usually, not always, but usually the US dollar index and gold go in opposite directions. And I think dollar is topping at the moment. I think it's ready to roll down for a couple of months into the declining phase of this intermediate cycle. One of the indicators why I think dollar is topping is, of course, the oversold levels on RSI that we saw a few weeks ago over here. And another indicator is the divergence between the price action and RSI. Price is showing us higher highs, whereas RSI is not following. This is called divergence, and often it indicates a reversal in the trend. In this case, we've been in an uptrend for a few months, and we are likely to reverse that for a couple of months. And if dollar is going to trend down for a couple of months, that is very likely to help gold move up for those couple of months at least. Now looking at the weekly chart of gold, another reason why I think we are really almost done with this intermediate cycle. It's quite likely that tomorrow we'll see a nice green day. Anyway, this is a weekly chart. Since the beginning of April, since early April, gold lost about 7.7% from like 1262 to 1257, where we were a minute ago. I saw that. Now we're already at 1258. So that's what happened to gold since early April. Looking at GDX, since early April, GDX only lost about 5.7%. And usually GDX outperforms gold in both directions, going down and going up. So whenever, for example, gold drops by 10%, GDX generally drops by more than that. In this case, it doesn't happen since early April. And one reason for that might be that more agile, more smart money that often uses GDX itself rather than gold bullion prices. So this smart money might be expecting an upcoming rally, and that's why we don't see a huge sell-off in GDX. Of course, one might counter-argue that we don't see a sell-off in GDX because it's stretched too far below the gold prices themselves. We mentioned that in the previous video. Gold generally has been trending upwards over the last year and a half or even more, whereas GDX horizontally to the right over this same year and a half. And coming back to this weekly chart of gold, I have previously looked at a channel that really looks something like this, and I was expecting gold to sort of bottom near 1270, 1260. To be honest, I didn't expect gold to go as low as it has actually. But this sort of gives us another picture. If we connect these significant lows that we saw in December 2015 and then in December 2016, and if we connect those significant highs, we see an ascending triangle, and well, maybe over the next several days gold does continue to decline down into sort of well, 1250. We see 1249 over here. So just as I said, that is one of the reasons why I think over the next several days we still might see lower prices, but I don't think it's going to be much lower than 1250. And well, there is a pretty good chance that even today we're already starting to move up, and we might have seen the low already. Well, we see an ascending triangle formed over the last couple of years. Looking at ascending triangles in Investopedia, it says that generally these often happen during a consolidation after a significant decline, or these also might happen as a consolidation period after a significant increase in price, and in both cases ascending triangles more often statistically break to the upside. So that also agrees with our expectation of higher prices over the next several months, and I would be curious to see if the triangle is going to be broken during the next intermediate cycle, or is it going to take the following one to finally get us significantly higher than, say, 1380? Well, we'll have to see about that. In either case, I'm pretty positive on the gold price over the next several months. And the last thing I want to look at is Fibonacci retracement numbers. Let's see if they tell us any story or not. Looking at this low we saw and at this high we saw in middle of April, prices at the moment are already below 78% retracement. So we've retraced more than 78% of the previous rally. And well, if we were just at the 78% retracement, I would be inclined to say that it often acts as a support zone, and we're about to bounce off that support zone. However, we've broken down below that. So for that reason, what I would say about the Fibonacci numbers is at the moment they're not really telling us that much. And lastly, talking about the actual investments, I've been buying GDX and SLV since sort of the middle of May. That was a possibility that was going to be an intermediate cycle, and I've been adding gradually to my positions. Although I started a little bit too early, luckily GDX itself didn't go that much lower compared to the prices we saw in the middle of May. How about you? What do you guys see on this chart? Have I missed something? What are your expectations over the next, say, 2-3 months? I'd be interested in your comments, and I would appreciate likes under the video. Thanks.